Right, hello everyone, and thanks for joining in for our Q&A session for this month. Okay, so guys, just to let you know, obviously for the Q&A session, this is like an open questions and answers session. Okay, so any questions you guys have got in terms of trading or in terms of um, utilizing particular methods and so forth, we can handle that kind of thing. So the floor's open at this point in time. If there's anything specifically you guys would like me to tackle and that kind of thing, by all means, shoot away. Just let me know in the comment section, and then we'll get started and take it from there. So let's see, what is there that any of you would like me to touch on or help with, even if it's questions about setting up portfolios or those type of things, anything really. Oh, come on, gents, there must be something. Otherwise, it looks like I've done my job well then, eh? If you want me to show you anything in particular of setting up trades or those type of things, by all means. I mean, that's why I've got the platform open. It is running with live price, so we can basically play around and do exactly what we need to. Okay, well, seeing as I'm not really getting any questions from you guys at this point in time, by all means, hit with the questions at any point. Okay, but I think what I'll do is I'll just touch on a couple of little things at this point in time to um, make sure that you pick up maybe a couple of extra tips and those type of things to help manage your trades. Okay, this is actually a question that I got from a client earlier today. Now, this client of mine, he basically trades the Ichimoku himself, and he runs his trades on daily charts and 4-hour charts. Now, the issue that he's been experiencing, unfortunately, is that he gets confused between his trades. Because now the unfortunate thing and factor is that when he takes a trade, and let's say he's trading the Euro US dollar, what happens is that he takes the entry for daily chart and then later takes in 4-hour entry. But now the problem is he can't distinguish between the two types of entries and know which one is which and which stop is with which type of entry. So what I want to do is I just want to quickly show you guys how we can manage different systems being traded on the same chart. Okay, right. We've got William that's kind of asked us a question just to run through some of the Ichimoku basics. Great stuff. We can definitely do that. Okay, let me just quickly handle this first little thing I want to show you guys, and then we start tackling that Ichimoku. Now, what we can look at doing as well, and I think it should be available. But William, what I'll do is I'll also just activate the Ichimoku course for you. Okay, so that you can go and view that on the website itself as well. It goes into extreme detail into what the different components and so forth are. So you would have that as an extra. But I'll definitely be tackling the Ichi for you then right after this. Now, let's have a quick look at exactly how we are going to differentiate between, let's say, two types of systems or two types of time frames. Now, let's say I'm looking at this 15-minute chart, and all I'm going to do is I'm looking at an entry where we see that red candle over there. I'm just going to zoom in slightly. The red candle closing from above to below the large moving average. Let's just use that as a rough entry condition. So what we're going to be doing is we're going to be getting in for a sell position. But this will be a 15-minute trade. Okay. Now, what I want you guys to look at is look at the terminal window at the bottom here. Now, you see all the tabs situated over here. The one I want you guys to have shown on your tab, okay, let's check here. You right click, and you go to the comments section here and just click on that and make sure that there's a tick on it. And you see here basically, some of you might have not seen that. Let me just quickly get the sharing of that up again so that you can see it. I'm just going to need to do a full screen share. There we go. That should do it. Perfect. Okay, let's get back to that. Okay, now here we go. Okay, so look at what I'm doing. I'm going to the section here. I'm just right-clicking, and the comment section there, right, needs to have a tick next to it. It will then list the comment tab over here. Now the comment tab has got a filter section built in it as well, so you can actually have your trades filtered according to the comments themselves. So you'd have, let's say, strategy 1 basically set with all its trades underneath it, and then strategy 2 maybe. Okay, so let's quickly run through the process of setting a comment for a trade. Okay. Right, now obviously to take a trade, what we're going to do is we're going to go in for a sell position. So if we're going to go in for a sell, stop is placed at the most recent high. This is just going to be a dummy trade, okay? So all I'm going to do is I'm just going to open up the new order window, and we're just going to take a dummy trade here of 0.01, okay? And you see here is the comment section. Now over here, I might write then strategy 1 15-minute. Okay. And then I just go with sell, trades taken, set my stop, and done. Okay, now here's the beautiful thing. Look at the comment section here. Okay, there it tells me which strategy I've used and what time frame I'm using for that particular trade. Let's say now we are going to go to a daily time frame, and we're going to look to take another entry. Now, with this one, let's say we're using the cross on the stochastic. Now, the unfortunate thing is that we're getting a cross happening there, but we're going to bend the rules slightly here. Okay, this is just now purely for educational purposes. Okay, so this is not a trade according to any specific system and so forth. Technically, if we're going to take that cross, then we would have waited for the confirmation, which is only going to happen tomorrow. Okay, so all we're going to do is we're just going to take a buy here, only because we took a sell on the smaller time frame, right? And what I'm going to do is I'm just going to go again to trading, new order, open up the window, another dummy trade, right? And now I'm going to make the comment, end of day, strat 2, and I buy. There we go. Now I can just go and place my stop and order, and let's say we're going to use that support resistance level over there. There we go. Okay, that's 2 trades in, each trade set to its own comment. So this will be a very brilliant way of filtering 2 different systems that you might be trading on the same chart. This only becomes an issue if you're going to be mixing, let's say, intraday trading with end of day trading, and you're going to be combining the same chart for both. Okay, or if you're running 2 different strategies on the same chart. Now, if you're going to worry and wonder which stop losses, which trades entry and so forth, all we do is here we've got a stop loss, right? Now let's say we want to find out what strategy stop loss that is. Look at the ticket number given in the left here, and just make sure that it matches up with the order number over here. Now there we've identified it. So we can clearly see that this is for the sell position for strategy 1 on the 15-minute chart. And now I can clearly identify between different types of trades by using the comment section. Brilliant little way just to make sure that you don't get into a tricky situation with those type of separate entries. Right, I know the screen's probably looking a little bit weird now. I'm just going to stop the screen share quickly and get it back to normal again. So let's just go and set, there we go, that should do it. Perfect. Okay, now let's quickly tackle then the Ichimoku setup. Now what I'm going to do is let's just quickly get another chart up here as an extra. And let's see if we've got the template here. Okay, we haven't got an end of day template, so that's okay, not a worry. All we do is we set that up quickly. Let's actually just go right click and we're going to go to indicators list and just delete all the indicators. And we're just going to load up the Ichimoku. Okay, so that's it. Let's get the Ichimoku in place. There we go. This is our friend favorite. Let's just see if the inputs are so yes, colors. Now I need to think again. I think, let's see. That should be right. That should be right. That I think should be there. I think sandy brown is lime and thistle should be red. I'm just changing the color scheme settings for the Ichimoku quickly. Let me just do the screen share properly so you guys can see what I'm setting it to. Let's get it here, entire screen. Okay, almost, that's it. Okay, here we go. Here's the little window. So this is how I'm setting the colors. I'm just going to double check that it's set correctly. It's up, that's down. That looks perfect. Okay, let's set this to a daily. Okay, brilliant. Okay, that looks good. Right. Okay. Now, all I'm going to do is I'm just going to reset these settings as well. Let's get this. Let's just get rid of the indicators on this one as well. I've just opened up the indicators list on the chart. So now I'm just going to delete every indicator one by one. It's the quickest way of getting rid of them on a chart. Okay. And then I'm just going to load the Ichi up on that one again so you can just see it. So I'm going to the Ichi, clicking, dragging, dropping. And then, okay, so lime gets turned to magenta. Sandy brown is lime. Thistle is red. There we go. So those are the settings, okay? Right, now, the first two, number naught is the Tenkan Sen. I like setting that a little bit thicker. Same as with the Kujin Sen. I set that on 2. So the first two we set on 2. And then I also do it with number 4, which is the Chiku span. Right? So that's how we've got it set now. Okay. The width is 2 on the first two, and then on number 4 it's 2 as well. And then I hit OK. And that's how your Ichimoku should look then on the chart. Now you see that I've got some space in front of the chart as well. We need that, and to have that, you need to go to the top and activate the chart shift feature. You see there? I just click on it, gets the indentation, that means chart shift is on. And then I can see the future Kuma cloud. If you can't see the future Kuma cloud, make sure that you can see the open section in front of it. Okay, because that means you're looking at the entire future Kuma. If it looks like that, then you need to move it slightly further back. And you see the little triangle I'm clicking on here? It's got the chart shift that it's saying there. You just left click and drag it slightly back until you see the open section in front of the cloud. Then you know you've got your Ichimoku set up perfectly on the chart. Okay, so that's how we'd go about loading the Ichimoku specifically. Okay, right. Now, the different lines that we're looking at is we've got, if you look closely, you can see that we've got a little bit of a green dotted line running at the bottom here, and then a red dotted line running at the top here. Those are what we call the Senku span lines. So the bottom one, the green one, is what we call Senku span A. right? The top one, which is the red one, is what we refer to as, and you should know this now, Senku Span B. Here we go. Right, now the blue line, the blue thick line, is what we call the Kujin Sen line. And then the red line we refer to as the Tenkan Sen. Let's just make that red to match up with the line color. There we go. Perfect. And then obviously the purple one over here, or magenta as the platform loves to call it. Let's quickly get that set. That is what we call and refer to as the Chiku span. There we go. Right, so those are the 5 lines that the Ichimoku consists of. Right? Now, what you need to do is you firstly need to know these lines quite well. You need to identify which line is named what. That's the most important step before you can really move on to reading the Ichimoku signals. Okay. Now, the Ichimoku signals is explained in more detail in the Ichimoku PDF that we have put together for you guys in the course content itself as well. Now, let's run through just what each line does and where it's situated and how it works. And then we'll slowly look at each different entry signal that the Ichimoku produces. There's 5 entry signals that gets generated. Okay. Now, firstly, we've got the Kumo cloud. Okay, so let's actually just name that as well. The Kumo cloud is basically the colored in area. On the chart. So this whole section here forms the Kumo cloud. Now the Kumo cloud is formed with the Senku span A and Senku span B lines, and they will cross one another every now and then, changing direction overall. Now, the main feature of the Ichimoku is the cloud. When we analyze the Ichimoku, everything gets analyzed in comparison to where it is with the cloud itself. So the cloud is the overall bullish or bearish determining factor. Now, as long as price is below the cloud, it's bearish. So price went below the cloud from here onwards. So this entire section is bearish. If price is above the cloud, it would be deemed as bullish. Another thing as well is we look at the future Kumo to see what type of trending factor is set up for the cloud. And this is clearly red, which indicates that it is indeed a bearish trend. So the future Kumo gives us an idea of the trend as well, and more importantly, where price is situated compared to the cloud. So that will tell us whether it's bullish or bearish. So this one is bearish. The other thing about the Senku span lines is you notice that they are actually shifted ahead of price by 26 periods. Now, this is the type of way in which the Ichimoku is combined. There's 3 sections. There's the forward section, which is based off of the Kumo cloud, which goes ahead 26 periods. There's the Chiku span, which is behind by 26 periods compared to current price. And the Chiku span is nothing more than actual price. If I swap this chart to a line price, look there. It's the exact same flow as the Chiku span. So the Chiku span is live price just shifted back as a line chart by 26 periods. Okay, so that is the period behind price that the Ichimoku consists of. And then we have got the middle period, which is made up of the Kujin and Tenkan Sen lines, which acts as moving averages almost. They are slightly different though, because they do use a different type of formula than a normal moving average. But they feature and work almost in a similar type of way. This is why you would notice that with the Tenkan and Kujin Sen, you actually do tend to get quite a couple of flat sections. And it's because of that differentiation of, I would say, the formula it uses to determine how this is plotted. The beautiful thing is that these flat sections actually form a great indication of where support and resistance levels are indicated for price. You see how beautifully it runs, and look how price bounces off of those. Okay. When we go back further with this, let's just put this chart shift off so that it doesn't jump ahead. But even in S3, you'd see, look how price bounces off of these levels. Okay, so it's a beautiful way of identifying good support and resistance levels. Right. Let's just set that back to a candle chart. So those are the 5 lines that forms the Ichimoku. It's the Senku span A and B, which forms the Kumo cloud. It's the Tenkan and Kujin Sen, which runs with price. Okay. Remember, the Senku span lines are shifted ahead of time by 26 candles. And then we've got the Chiku span, which is live price shifted backwards by 26 periods or candles. Okay. Now that you know how it's put together and what we're looking at, let's look at the entry signals that we get generated by the Ichimoku. Now, one of the first signals that we tend to look at is what we call or refer to as a Kumo break. This is price itself breaking from inside the Kumo cloud to the outside. So here we see price trading inside the cloud and then going and breaking from inside to the bottom. That is technically a sell signal based on the Kumo break signal. Now, the Kumo break signal that the Ichimoku generates is probably the most difficult entry signal on the Ichimoku to take, purely for the fact that most of the conditions that we need to look at never line up completely in favor of the direction it's going into. So it's almost always like guessing whether you need to get in or not on those. Sometimes price just runs. So if you are weary of getting in when you get a Kumo break, sometimes we just hit that bit of Murphy's Law type of criteria, and then price runs and we never get an extra entry. Those are one of those that's just a hit and miss. Like I said, if you're worried about missing out on some of those movers, I'd rather suggest taking 0.5% risk rather than a full percentage on something like a Kumo break. Okay. Technically, I tend to maybe just wait a little bit longer for clearer signal, because what tends to happen is with the start of any new trend, it always tends to happen with a Kumo break. In other words, price breaking the Kumo to the bottom or to the top like here. And what follows very, very closely, or sometimes happens at the exact same time, is we actually get a future Kumo cross as well. Okay. So the future Kumo cross refers to the section of the cloud over here, and it would be the crossing of the Senku span A and Senku span B lines. Now that is signal number 2 that we're looking for. So now we've already looked at two types of entry signals that the Ichimoku generates. Now, another signal that gets generated as well, and we've actually got that happening right now, is the Chiku breaking price. And the thing is that here we've got the Chiku running into price, which means it's consolidating, which it has been doing slightly, and all of a sudden it breaks to the down. That is a clear entry signal. So on the completion of this candle, it would be an entry signal based on the Chiku breaking price to the downward side. Now remember, with any of these signals that we're going to get, we need to assess it with the rest of the parts on the Ichimoku. And I'll go into that shortly. I just want to focus on two other sell signals or buy or sell signals on the Ichimoku first. So we've done three now. We've looked at a Kumo cloud break. That's the first entry signal. Second entry signal that the Ichi generates is the future Kumo cross. So it'll be a cross from red to green like over there, or a cross from green to red over there. So all we're waiting for is we're waiting for the cross to happen over here. Now at this point in time, this is trending strongly downwards. We can see that everything's pointing nicely down. The Chiku span one is basically the third one, and that is a very good signal to take as well. That is a very strong signal, especially if the Chiku starts moving into clear open space. Now the fourth signal that we tend to look for is what we call the Kujin and Tenkan-sen crosses. So the Tenkan-sen is the leading indicator here. So if the Tenkan-sen crosses from below to above, like over here on the Ichimoku, right? If it crosses above the Kujin-sen from below, it's a buy signal. When it crosses from above to below, like we've seen now right here, right after, right? That's a sell signal. Okay. And then lastly, our final signal is what we call and refer to as a Kujin break. The Kujin break is price breaking Kujin, either from above to below for a sell signal, or from below to above for a buy signal. So right over here, we actually had a Kumo break from below to above, which is a buy signal. So those are the 5 different signals. Now let's look at how we are going to assess these entry signals with using it with the rest of the cloud to see whether it is a strong buy signal or a weak buy signal or vice versa. So for something like a Kujin break, this is a buy signal, but where's price situated at this point in time? For that candle specifically, ignore everything that has happened in front of that candle there. Only look from here. From this point on, right? Let's actually see if I've got one. Okay, I don't think I've got that script on here. I haven't got the Ichi line script on here yet. Okay, I'll work that in a short while. But anyway, 26 periods back would show where the Chiku was. Now the Chiku was basically inside the cloud at that point, and most importantly, it's below price. So if I get a buy signal, firstly, I want price to be above the cloud. I don't want it to be inside the cloud or below the cloud. For a strong buy signal, this needs to be bullish. At that point, it's actually consolidating. Therefore, it's a weak signal for me, right? Also, the Kujin and Tenkan-sen are situated below the cloud itself at that point, which is not a good position to be in. I want it to be above the cloud. Also, the Tenkan and Kujin-sen are in the wrong order. I'd rather want the Tenkan above the Kujin because that's also more of a bullish signal. I'd also like the future Kumo to be bullish if possible. But more importantly, like I said, I'd rather want the Chiku clear from price and above price. Okay. So this is how we start analyzing any of those signals that we get. We look at the position of price itself compared to the cloud. We look at the position of the other lines compared to the cloud. And then we look at the position of the Chiku span. Is Chiku span close to price? Because if it is, remember with the Chiku span, what we want is we want a nice, clear, open space in front of the Chiku, because that means that price can run. Technically, we've got confirmation of Chiku breaking price on this one because it's got some nice open space in front of it. When it was at that point there, it was actually heading into price, and I would not have taken the trade purely for the fact that when Chiku runs into price, it means that it's most likely going to consolidate. The beautiful thing is over here with this signal in particular, right? Look here. Tenkan and Kijun Sen are all pointing down, as is the future Kumo. The future Kumo is bearish. Not only that, price and all the other lines are situated below the main cloud above it, and the Chiku is below price and clear from price. This is a perfect entry signal for a Chiku break. That is one I would jump into. Okay, I wouldn't particularly on this chart in that case, purely for the fact that this is 1 hour chart. It would work on this chart in particular, but I personally like rather trading the 4 hour and the daily charts with the Ichimoku. Okay, purely because there's less noise in them, and you still get some nice trends happening in the 1 hour. And I have used it successfully on the 1 hour charts, but sometimes the profits are just not as big as you can get compared to end of day trades, because your end of day cycles tend to run slightly longer compared to some of your 1 hour charts. Okay. Now, that basically covers everything that you need to know in terms of the Ichimoku. I'm just going to stop the screen sharing here again so that we don't get confused in terms of that. Okay, there we go. That should do that. Okay, so William, just let me know if that's basically covered everything for you, or if there's anything else that you'd like me to touch on in particular with the Ichimoku. Also, guys, any of you that are on, I see Paul's also joined us and Matimba as well. Thanks for joining up, guys. Are there any questions that you guys might have for me at this point in time? Any questions? Shoot. Okay, perfect, William. Just use the PDF in conjunction with your normal analysis to just start getting used to it. The key factor here is just repetition, right? The key is the more you do this, the better this is going to stick with you. And then you can just run with the end of day trading sessions that we run on the Wednesday evenings, right, on the webinars. And you can just see whether your analysis compares with my analysis. Any of you who've been following with me with the trades now for about 2 weeks, you should be smiling because we are in some nice profits with the Ichimoku at this point in time. Okay, so how many trades can one have open at the same time as the percentage? Very, very good question, Selo. Now, this is where it could get slightly tricky. Here's the thing. If you're going to be trading one chart and one chart, and in it you're going to be running multiple systems or so forth on one chart, it might be a bit difficult trying something like that. But this is why we try and trade many different charts with the Ichimoku. This diversifies us a lot further. So what you will notice is you can actually take quite a lot of trades, and they will never happen at the exact same time for all of them. You might have one entry coming in on one day. The next day you might have 2 or 3. Then the next day you might have nothing. You might have nothing for an entire week, right? Or you can have quite a couple of entries coming up, one after the other for a couple of days. But the beautiful thing is that you're spreading your risk because you're trading different types of charts. So when some charts go against you, others will go in your favor. And this is the beauty of it. Okay, so you're almost delegating that risk of not having one chart move against you and wipe out all of your trades at the same time. Now, here's the other question that you actually need to answer yourself, because this comes down to personal opinion. Okay, this is something that you have to be comfortable with. If you're going to be running with 20 trades open at the same time, would you be fine with all 20 going against you? That'll mean a loss of 20% on your account. Now remember, that is extremely unlikely to happen in terms of running with something like the Ichimoku on an end of day strategy, purely for the fact that we're trading different instruments, okay, and different charts. So you're not going to have the exact same exposure from one to the other. When one's going your way, another would be going against you, and so forth. But the other factor that is going to determine how many trades you can take is going to come down to nothing more than your leverage that you've set on your account. Now here's the thing. Normally, what I tend to advise clients is when you're going to be trading intraday, you want to have your leverage set to as low a possible number. Because the problem is we're taking bigger types of risk per point on an intraday account compared to an end of day account. What I mean by this is that we're risking more dollars per point on short-term trading compared to long-term trading. So smaller movements has got a much bigger effect on your account if it runs a lot further compared to something like an end-of-day account. Now, your leverage will determine the maximum amount of trades you can have open at the same time, because your leverage is what determines your margin allocation. Okay? Look at the platform at the bottom here in the trade terminal. I'm just going to set this slightly lower. And you see that I've got a margin requirement over here for the trades that I've taken, and then I've got a free margin open. Look at how big the free margin is compared to my actual margin. This is because I've got a very, very big leverage. And if I'm right, it's about 1 to 400 on markets.com. It should be about 1 to 200 on some of your CFDs. And with some brokers, you can actually preset your leverage. And normally you can choose anywhere from 50 to 1 up until 500 to 1. There are some brokers that do go to the extremes of offering leverages of 1,000 to 1. That's a bit extreme. I would really recommend and going with that. The only thing is the leverage means there's less, think of it, deposit that you need to put down per trade. So when your leverage gets to the maximum amount, the platform will not allow you to take any further trades until you've freed up some extra margin on the free margin side. So that's going to be one factor that's going to determine how many trades you can be exposed to at the same time in your platform. Okay. So it comes down to leverage setting, because your leverage determines the amount of margin you're going to pay. Now, with you guys, when you sign up and that kind of thing for your accounts, your leverages are automatically set depending on which broker you're with, either from 400 to 1 or 200 to 1. Those are perfectly set leverages for the type of trading you're going to want to be doing on end of day as well. And like I said, because we're so diversified within our end of day trades, we shouldn't have a problem whatsoever with every single one going against us. Right, Cello, I hope that has answered your question in detail. If there's anything extra you want to ask and want me to go on in broader detail with it, by all means. Okay, great stuff. Okay, so Matimba's asking, could I just quickly repeat the Kubo, Cloud, and Senko span signals? Not a problem. There's 5 signals that we're looking at, right? The signals that gets generated is a cross between the Tenkan-sen and Kijun-sen lines, right? So it's the Tenkan-sen crossing from below to above the Kijun-sen, which is a buy, or from above to below the Kijun-sen, which is a sell. That's one of the signals. The other signal is Kumo break, price breaking out of the Kumo cloud from inside. So if it breaks to the top, it tends to be a signal of a bullish trend happening. It's also a trade entry according to the 5 different Ichimoku signals. Then we've also got the future Kumo cross. So we're looking for a cross between the Senkou span A and B lines on the future Kumo. So they would look like these little sections over here, these crosses happening here. That's what they would look like. And they get triggered in the front over here. So the Tenkan and Kujin Sen crosses gets triggered right with price, which has happened right over there for a sell signal. There's the future Kumo signals or future Kumo crosses, which is the other signal. So 1, 2, which happens over here. Number 3 is the Kumo breaks, right? Kumo cloud breaks. This will happen with current price breaking the cloud into a direction. So that's 3. Number 4 is the Chikou span breaking price into a direction. So right over here, we've actually had the signal, we've had the confirmation. We've got some beautiful clear open space in front of the Chikou span. It was a sell entry right over there. Okay, so the Chikou breaking price as well into a direction is signal number 4. The last signal is a Kujin break. That's price breaking the blue Kujin line. So when it goes from below to above the Kujin line, it's a buy. And again, like I mentioned before, this buy signal here is a weak buy signal, purely for the fact that Kujin and Tenkan is below the cloud. The actual Kumo here is bearish, and price is inside the Kumo. The Chikou span was inside the cloud and below price, and the future Kumo didn't look too good. It looks like it, was crossing to go to a bearish future over there. So we just check all 5 of those signals according to the rest of the chart and where they're situated, and that helps us make a better choice of what type of entry we're going to rather wait to take with. Okay, the trick with the Ichimoku is not to take every single entry condition that comes up. That's not the way we trade it. Okay, how we go about it, and that's why it's very important for you guys to follow the end of day webinars for the live trading sessions, because you're going to learn so much in how we analyze and determine whether we rather leave the current signal being given and wait for better opportunity, because these signals tend to happen concurrently from one another. They actually happen one on the other. So when we tend to get a Kumo break, we tend to see that we have a future Kumo cross happening very soon as well. Or we might have Chikou breaking price as well. So if it looks like if I wait maybe a couple of candles for those and they could set the chart into a better position, I'd rather wait for them than just jumping into every single signal. Because what happens then is you might actually get into quite a couple of false signals. And for me, it's all about the quality of the signal instead of the quantity of signals. I'd rather make sure that I take a trade which has got a much better probability of producing profits than just taking a trade for the sake of taking an entry. Okay, and that's the whole thing. So it's just going to take a little while to get used to the process of how to identify whether it'll be a good idea to maybe wait a couple of candles extra for better type of opportunity with these types of signals. Okay, right. Has that covered it? Okay, perfect. Great stuff. Glad to have helped you with that one, Matimba. Paul, is there anything from your side? Or guys, is there anything else that any of you would like to, have me run through and that kind of thing? Still got about about 15 minutes left for the session. Okay, so Paul, all good? Great. Okay. Which currency pair should one trade is the question from Cello. Okay, now, for intraday, okay, if you're going to be looking at trading intraday, what I tend to recommend is going with the major pairs, and that's your US-based pairs. Okay. In other words, it's going to be the Euro US, it's going to be the Pound US, it's going to be the US Yen, one I love to hate, purely for the way in which it moves. You're going to need to find. I tend to think actually that something like a points-based system would work better on something like the US Yen. It's not one I really love to trade heavily, but you could also even trade something like the US franc is another one. So those are your four majors. They tend to be your cheaper spread unit. So your costs on those four are a lot less compared to the rest of the instruments. You can also trade any of the indices and those type of things, but remember, the risk is a lot more geared on those. So you need to be ready to be able to trade those. Please, please, please just do not at all trade any indice, okay, or CFD without having run with that on a normal demo account first. The exposures are so different between those types of instruments. Okay, if you're just going to go straight live with it, you might burn your fingers and wipe your account in as easily as one trade. So be careful. Okay, but forex-wise, you can go for quite as many pairs as you'd like. I wouldn't recommend going more than 3 charts at the same time for intraday trading, purely that it starts becoming difficult after 3 instruments to try and manage and maintain trades, specifically if to manage your trades as well. Okay. For end of day, you can actually run for almost any type of instruments. Okay. You can go with almost most of the forex charts, but what I like to do is I always like to go for the 4 majors, which is basically the Euro US dollar. It's the, let me actually just quickly get the, because I have got the platform open and I can show you guys exactly what I run with that. Let's get the screen share up quickly. Here we go. Here we go. Okay, these are all the charts I run with. So if you guys want to, you can make a quick note of them. It's basically the 4 majors, which is the Euro US dollar. That's the Pound US dollar. And look how beautiful that one's running. This one's giving a signal. It confirmed a signal yesterday, but I did not want to take it purely for the fact that we had the Chiku inside price over here. But now it's cleared price, so we're most likely going to have this as a confirmation of entry tomorrow, okay, for our end of day session. We've got the US franc, okay, as one of the other ones. We've got the US yen. Those are the 4 majors, okay, and then all the cross pairs. Now the cross pairs are your charts like the the Euro pound. Okay, it's going to be your Euro yen. It's going to be your Euro franc. Then it's going to be your pound franc, pound yen. Then it's going to be your franc yen, and it's also going to be the euro. I've got the euro franc, and then we should have. I think that actually covers all of them, because in total, if you've got the cross pairs as well, that will give you a total of 10 charts that you can be trading. Those are the most common charts that gets traded. And then all the little extras that I like to go with as well, to add just those extra couple of opportunities that you could aim for. That's the US Canadian dollar. And it is also the New Zealand US dollar and the Aussie US dollar. Okay, right over there. And then also the Aussie New Zealand dollar against one another. Right. So that should kind of push it up to about 13, almost 15 different charts that you can trade. Now, any of the other types of pairs that you're going to find would be what we call some of the exotic pairs. So you'd get your ruble, you'd get your rupee, and all those different types of ones. I don't really bother about them because they don't tend to always have good flow on them. They don't get traded as often as some of the others. So these charts that I've mentioned now are the type of charts that tends to generate much better movement. Okay. look at how nicely, we get some of the trends happening on. Let's just zoom out slightly more. You see, we get some nice trends running, with the Aussie New Zealand dollar as well, and that's why it's a nice one to go with as well every now and then. Okay, so anything that kind of generates good trends every now and then is something you can go with in terms of forex charts that you can trade with the Ichimoku. Okay, if you want to, by all means, push it up to 20 charts. It's a personal choice. But those 13 pairs should be more than enough for you guys to get started off with. You can see basically that our entries that we've taken all are in profit except one. All right, that's the US CAD at this point. Let's just have a look at the US CAD quickly. It's just that one pulling up. Now, the only reason that one was taken is that is just one of those risky little trades that has been taken purely for Kumo break. Reason why I went for it as well is because I had the future Kumo cross. Okay, so I had the Kumo break, and I didn't want to take that one because I didn't like really where price was, situated at that point, and there wasn't enough going for me. So I just waited for that to happen there. And like I said, these are the more difficult ones to take. Okay, but yeah, I just took this one purely for the fact that, it gave the signal, that kind of thing. And not only that, I was happy with the fact that the Chiku was below price. Even though it's above the cloud, the nice thing is that currently it is still clear from price. Now, if this goes sideways slightly a little more, that's when I'd be getting a little bit more worried. But I have got my stop loss in place, so if that one goes against me, it goes against me. One of those things. Like I said, these tend to be one of those where, they can break and then they can run and never give you an entry, like over here. You see there, where did the Kumo cloud break? And it ran. And look at how it ran. We never, ever, ever got another entry signal again. And all that was happened is you only would have been taken out with your normal stop and made profit on that. That is one of those hit and miss entries. That's the main reason for taking that trade, basically. Okay, so I kind of hope that that kind of answers it nicely for you. Okay, so Paul's asking, okay, what about the US dollar rand? Well, I'd say it could be a good one to look at, definitely. I'm not really a fan of any rand chart. I almost feel like it's a bit of a biased thing. Yeah, I always tend to joke as well. The only problem is that a lot of the time, what you're going to notice is that the US rand charts can't be traded on a lot of brokers. So they'll have it available, but you can't really trade it. So they tend to be grayed out. I'm just going to try and see if I can maybe find it over here. We can just quickly load it on and we can have a look at what it's doing. There we go. There it is. Boom. So let's just load it right on. No, let's load it as an extra. There we go. Now let's just load the template on. There we go. Okay, let's quickly get this to a daily. There we go. Okay. Now this has had some beautiful moves, but you can see this is quite volatile sometimes as well. Okay, that's the only thing though. That volatility could be hurtful at certain points, but overall this looks to have good trends. So this is definitely one you could also look at. Definitely. Okay, so by all means include this in there as well. Okay. Short-term gains, if you ever want to make some good money, I always joke, and somehow for the past couple of years it's always been right. But whenever there's a State of the Nation address, basically just make sure you, because it's this chart is it's not the Rand US, it's the US Rand. You're always going to want to long it. Because it always works against our favor. The Rand always depreciates, okay? And it's purely for the fact that they can never, ever, ever come up with clear and precise policies in terms of business and those type of things. And that makes a lot of foreign investors and so forth very shy to jump into any South African investment. And that's why the rand depreciates most of the time when, there's any kind of State of the Nation address or those type of things. Or with any address that Zuma tends to make. Kind of happens like clockwork. So have a look at it, and you'll see kind of how these things tend to affect it. It was when was it? It was December, right? When the whole what's it, Minister of Finance debacle happened, and look at the shots it made in terms of the rand, the affected rand. So there was some very, very good short-term money to be made just on that. Obviously we've got a bit of an advantage when it's something like the US rand, purely for the fact that we're locals. So by all means, if you want to look at utilizing something like that, definitely. But remember, when you're going to be trading something like that, do not get greedy, guys. Okay, even if you think you've got like this little inside info and you've got a bit of an idea what could happen, anything like that is what we call basically news release trading, or more better known as fundamental type of trading. Be careful with that though, specifically for short-term benefits and that kind of thing, because it does get a bit risky sometimes, and I'd rather say try that out with risk capital. Okay, so in other words, take a small portion of your account and use that as risk capital, and you can play it on something like that then. Okay, but yeah, that's definitely a good one to look at, Paul. Definitely. Okay. Right, so we've still got 5 minutes, 4 minutes before the end of the session. Had some great questions at this point in time. Anything else that any of you would like to ask while I've still got a lot of you on here? See, we've got someone else on here as well. Okay. So, okay, no questions there. Okay, ratcheting the stop loss. Okay, so that's what Seller's asking. Okay, Seller, just to get a bit of, clearer needs from you in terms of what you're looking for. Is it any type of ratcheting of the stop loss, or is it specifically with the Ichimoku? Okay, on the Ichi. Great stuff. Okay, we have got a couple of charts obviously running, and I can move the stop, so I would definitely be able to actually show you a practical example today. Yay. Right. Now what we do is we ratchet our stop loss according to the third flat level on the Kijun, always away from current price. Okay. Now, to give you an idea, okay, this is a flat section on the Kumo, right? But it's not finished forming. This only finishes forming once it either goes up or down again. So then we count it as a flat section. Now, because this one's still forming, we don't count this. So we go and we look at that one. That's 1, 2, 3. So that's where the stop loss would be situated. Now let's go through some of the other charts. I think with this one, and we'll take that entry tomorrow, obviously. Let's see, not in that one. Okay, now with this one, let's see. We've got the stop loss over here, and that was set based on normal. Stop loss placed within most recent high or low within 7 candles. Okay, standard setting. At this point in time, we've only got one flat section, so we're never going to be moving that until this has formed more flat sections. Okay. Next one, sell position, right? Similar situation. I mean, the Kijun's above that. The Kijun needs to move below this before we can start ratcheting. So that one we're going to leave in place as well. Now here we've got a different story. Okay, so we've got this pointing down, so that means that's flat section number 1. Flat section number 2, flat section number 3. We've currently got that set on number 4. So I'm just going to move this one down to that little flat section right over there. So then it's 3 flat sections back. So I just move it to over there. I set it in place, and that's where it changes to. Now it's 1, 2, 3 three completed flat sections back. Let's see if there's another one that we can ratchet. Right, nothing here, nothing here, over here. Okay, you see how this one has started pointing down? This means that I can now use this as a flat section. So it's 1 flat section, nothing, nothing, 2 flat sections, 3 flat sections, a small little one. So this one I can move down slightly lower as well. That's it. That one's ratcheted, updated to recent price. Okay, and that's it. That's really it. Okay, so just make sure it's always 3 flat sections back. This makes sure that you've got more than enough room for price to make these little retracements, okay, and give it room to breathe in, and that it can then continue in the normal direction. If you're going to set it too tight, you're going to get stopped out too early, and you're going to turn what should have been a winner into a loser. Okay. And that's the big reason why we run with this particular ratcheting method. Works very, very nice. Okay. Right. So has that basically handled that ratcheting for you, Selo? Perfect. Great stuff. Okay. Guys, I think, yep, that's basically it for the Q&A session. Thanks a lot for all of you joining in. It was great to have you on here. You guys had a couple of good questions there. Like I said, guys, you're going to have more questions that pop up. Now, once, especially since you start getting into more detail and so forth within your own trades, you might have had a couple of situations and those type of things. So, any questions that you do get, which comes up while you're learning and that kind of thing, make sure to make a little note of it and that kind of thing. By all means, you guys can always just send me an email and ask me. But otherwise, we'll handle everything within these Q&A sessions. Okay. Remember, tomorrow we've got our live trading session, so we're going to have the intraday tomorrow morning starting at 9 a.m. running till 12, and then we're going to have our end of day session from 7 till 8, and there's going to be a couple of entries we're most likely going to be able to take. So excited for tomorrow. Hope you guys are as well. Right, guys, thanks a lot for joining. And I hope you guys enjoy the rest of your evening. Otherwise, I'll see the rest of you tomorrow then. Okay. Cheers, guys.